welcome to the first in a series of weekly updates in the oil and bunker market here at FIS, as we look to take a quick snapshot over events of the past few days and look at their impact on the market. So let's kick things off with this week's biggest event, which was the OPEC meeting. It's actually being held today. The market has been twitching all week to try and find some clarity on OPEC's next move. After months of production cuts, which have seen supply and demand dynamics shift in a much more positive direction, despite the impact of COVID, we're now kind of waiting with a bated breath to see what their next move is going to be. On the one hand, from Saudi Arabia, you've got quite a bit of caution. On the other hand, you've got a lot of pressure from Moscow to try and raise output. So really, we don't know the specifics yet, but we are just waiting for some guidance and some clarity to see the market's next move. This is reflected in quite a few jittery moves this week. We've seen quite an increase in volatility in the market. While OPEC is still widely expected to revive some of its 7 million barrels a day that they idled, like I said, the specifics aren't yet known. One thing is for sure is that the trajectory of oil price in the coming months now does rest upon this outcome. We're currently trading at around $64.50 at the time of this review, with many analysts, Goldman Sachs, Morgan Stanley, etc., expecting prices to rise between $70 and $75 in the coming months. As Brent pushes higher, we're seeing this have a positive impact on the fuel oil market as well. We recently saw $500 a tonne, for example, on the front month March Singapore contract, and around $485 on the Rotterdam. It's weakened slightly since then. This week, this has been impacted by a slightly weaker gas oil market, so the FOGO spread, which dictates the price of the VLSFO, has come off slightly. But again, I think this is just in keeping with what we've seen on Brent as well, as that's slightly weakened. We're actually seeing some strength in the high five market, which is the scrubber spread. We've had a lot of interest from customers this week in regards to that. Last week we traded the longer term Cal 22 contract at $127 a tonne for Singapore and $125 a tonne following that. This is obviously a far cry from the sub $100 we saw at the back end of 2020. So as we're seeing much more strength in that, mainly due to a weakening in the high sulfur fuel oil market, Cal 22 cracks are getting weaker this week, 9.95 as the last trade. We're seeing a lot of people look to lock in their longer term scrubber hedges. Again, we're all just waiting for this OPEC meeting, so I look forward to speaking to you next week with hopefully a bit more clarity in regards to that. And until then, I wish you all well.